Good evening, everyone. Welcome to the webinar. This is the webinar on the DayTradeMax system. Once we run through the presentation, there's going to be plenty of time for Q&A. So if you have any questions while the presentation is going on, please do type it into the question box. And rather than break the presentation, I'm going to get to all of the questions at the end. So please, if at any time, if you feel that you need to, you have a question, I think it's a good idea to enter the question right at that time before you forget the question. So please go ahead and do that. My name is Hari Swaminathan. I'm the founder of OptionTiger.com. Option Tiger is a cutting edge options trading, education, and proprietary strategies company based in the Washington, D.C. area. And I have a bachelor's degree in engineering from India and an MBA from Columbia Business School in New York. I've been an options trader for about 8 years now. The first 2 or 3 years, frankly, was spent making a lot of mistakes. I think that's an experience that many options traders might have encountered. Options do have a learning curve, as we all know, and the key is to not lose too much money in that process while you're in that learning process. However, I did lose money, and at the end of it, it was a fairly frustrating endeavor. And that's when I realized that in the options game, you have to um, approach the entire options market having some edge over the market maker, because we do have a significant disadvantage when we look at the market maker edge, the bid ask spreads, their ability to set option prices and change option prices pretty much at their own will. And of course, at the end of it all, we are humans as traders. We do make mistakes. We get consumed by our emotions. We panic. We do the wrong things. And of course, transaction costs also ends up hurting us. So all of these are, when you put it all together, it's a pretty big negative. And so since then, I have developed a few proprietary systems. Now, today, what we're going to talk about is the DayTradeMax, but we do have other products as well, which you can see on the website. We have a product to manage iron condors, straddles, and spread systems, and a couple more are on the way. Okay, let's get started with the DayTradeMax system. Now, as the name suggests, this is a short-term trading system. I would say most of the trades are going to get over on the same day. So basically 85% of the trades are going to, you're going to close them out on the same day itself. There could be a very good reason why you might want to take a trade into the next day. In that case, a small percentage of those trades will go into the second day, and frankly, very few will go into the third day. And there's a reason for that. The reason is, now, as you can imagine, in a day trading system, you want to get in and get out with a profit. Whether you're going bullish or bearish, whether you're buying calls or puts, you want to get in and get out with a profit. So, which means the importance of when you get in is actually the most important thing, because if you make a mistake in that, then you're setting yourself up for a losing trade. On the other hand, if you can get a high probability signal and a high probability entry into the trade, that really sets you up with a significant edge, and you're able to then, even if it's a small profit, you're able to make a profit and come out of it. So this is a signal based system. The signals themselves are generated from a set of indicators, not very complicated. We're going to talk about the indicators on the next slide. These indicators are highly customized. And if you look at the overall game plan, so the game plan is you want to maximize your winners. You want to get the maximum return out of them. So if you can manage a 20 to 100% on your winners, and you will get a couple of losers every now and then. So you want to quickly close your losers out, because no signaling system, no system for that matter, is perfect. And you are going to get some fake outs and all of that. So you want to close out your losers quickly. And the way I have I have put a mental marker that if your option loses 20%, it's time to get out, and just give it, give up on it. It's time to move on, and that's fine, because on the winners you're generally going to be making 40, 50%, 60%, 80%, things like that. So not only are you making more on your winners, but then it also becomes a numbers game. So because the signals are very accurate, because they are high probability signals, you're going to see that 7 or 8 out of those out of 10 signals are going to be winners. So we come out ahead in two ways. One is, first of all, 7 or 8 out of 10 are going to be winning trades, and secondly, on the winners, your average winning percentage, your returns are probably going to be in the 40, 50%, 30, 40, 50%, 60%. If you look at it as an average, I would say about 40 to 50%. And then on your couple of losers, you want to cap it to 20%. So that's important. So risk management is important, and you want to cap your losers to 20%. So that's the general game plan. That's the system. Let's now talk about what are the core foundations of the system. So what we call the pillars here. So first of all, the indicators that we use, and they're not complicated indicators, they're not proprietary indicators. You're going to find it on all charting software. However, they're highly customized for our needs. And so that's really the key. They're customized to give you a very accurate signal, and a signal that you can rely upon. So when we say rely upon, means 70, 80, 90% of the time, the signal should generate the accuracy required for a successful trade entry. So obviously the indicators and the signals are core to the system. Without that, you wouldn't be able to make a trade entry. Now, then the next aspect is the trend identification. So because you want to look at what the overall markets are doing, you want to look at what the stock itself is doing, both from a near term, short term, maybe a month, maybe 3 months, and at the same time, you also want to know what it's been doing in the last few days. So you want to have that kind of a picture in your mind, because as we know, trend is your friend, and you want to align as many ducks as possible to give you the best chance of winning. So we discuss all of that, the trend identification, when to get in, and I'll actually show you a good example of what happened today. And I think that'll be a learning experience. Then finally, and most importantly, actually, you want to be able to choose the right option, the expiry, the in the money, at the money, out of the money. So there are plenty of alternatives, plenty of choices to make there. And so that's important as to how you want to choose which one, because you do want to choose different ones at different times. So it's important to sometimes come closer to expiry, sometimes maybe move out a little bit. Sometimes it's important to go in the money, sometimes it's important to go out of the money or at the money. So all of these factors are important. And so when do we decide which one is the right one? So these are the four components, the building blocks or the foundation blocks of the system itself. Now, most of the others, I think, are fairly simple. Everybody knows that option selection is important, that you have to identify the right trend and get in with the trend. What's unique about the system, obviously, is the indicators and the signals that we generate. So let's talk about them for a couple of minutes. We only use 4 to 5 commonly used indicators. So like I said, you're going to be able to see these indicators on pretty much every trading platform, including platforms or charting platforms around the world, because these are such widely used indicators. They are indicators that are simple to analyze. So you don't need to draw any kind of fancy charts on your, fancy drawings on your charts. You don't need to identify some, Fibonacci levels and, all of that. And you don't need to do any kind of calculations or anything. So they are what I call the eyeball variety. So you look at it, you'll know, are you getting the signal or not? It'll take you no more than 5 seconds. That's it. So they're simple to analyze. It's visual. They are the eyeballing variety. But what is unique is that these indicators are highly customized for our needs. And when I say for our needs, meaning as a day trading system, you want to get a short term signal. So you want to get the most high probability signal for the short run. And we do customize these signals for this purpose. And the way we customize it to our needs, the success probability of these signals, I would say, lie in the 80 to 90%. That's why we can expect about 7 to 8 winners out of 10. And so that's important. That's a critical component of because trade entry is most of the job. If you get the entry right, most of your job is done. So that's very important, and obviously that is the core intellectual property of the DayTradeMax system itself. Now, it's important to realize that your signal is going to run out. It might run out in minutes, it might run out in hours, it might take you over to the next day. But very rarely will, like I said, no more than 10 to 15% of the time will you be holding anything overnight. And certainly into the third day is just not practical at all. So I would say 1 out of 50 trades might go into the third day. 3 or 4 or 5 out of 50 trades will go into the second day. But it's important to realize, because it's a short-term system, and we are depending on this short-term system for our trade entry. And so, by definition, it also means that even your exit signal will come soon, and it'll be a signal that you will want to get out at. So we just need to bear that in mind, that the signal will run out soon. If you have a good profit, I would say take it. That is always better than losing out on some profit. And I'll show you, today's trade was actually a very good example. I'd sent out a video on Chipotle Mexican Grill, the trade that we did today. I don't know how many people got a chance to see it, but we'll discuss that trade in this webinar. And as I mentioned, these indicators are available in all markets worldwide. So if you're tuning in from any other country around the world, you're going to be able to use these indicators on your charting platform there as well. So basically, the DayTradeMax system is available for pretty much anybody in the world, whatever market you trade in. And of course, I've forgotten to add here, it's also applicable for any instrument. So basically, whether it's stocks, futures, options, ETFs, whatever you want to trade, because a signal is a signal, and it doesn't matter what instrument you're trading, it will work on that. All right, so let's now talk about a typical trade environment. And so when we talk about trade environment, when the markets open at 9:30, there's a lot of noise at that time. That's because the markets are adjusting to all the overnight news around the world, all the events that happened, and so there's a lot of the pricing is not efficient at that point. There's got to be buyers and sellers coming in, and at some point by between 9:30 and 10 a.m. Eastern, those prices start to settle down, and the real pricing comes out. And in many cases, I've noticed sometimes it takes a little longer. Maybe by 10:30 or by 11 a.m. Eastern time is when you get a good feel for, okay, how this market is going to be today. But again, we'll discuss today's trade because it was, as you know, today's markets were a little strange, and so we'll discuss what happened today. Now, in our trades, we only take long calls and long puts. So this has several advantages. Now, these are both debit trades, as we all know. Therefore, the maximum that you can lose on these trades is what you pay for those calls and what you pay for those puts. So if you want to go on the bullish side, we'll take a call. If you want to go on the bearish side, you'll take a put. So it's low risk and it's high reward, because if you do get the move, then you can see how you can easily create your 30, 40, 50% returns on those positions. And we're going to also be pretty selective. So we're not going to just take any trade. We're not, even though we'll be looking at about 6 to 10 stocks, and at any given day we'll look at about two. We'll zero in on about 2 or 3 stocks, and we'll watch it. I'll watch it, and or you can watch it if you're going to be operating on your own. You can watch it, and by around 10:30, 11 a.m., you want to pick the best one or two and take your trade. Now, so it's in many other ways also it's a simple system because there are no adjustments. Either we get in, and if we get our move, we are going to exit with a profit. If we don't get our move, that's the time you want to limit your losses to 20% of what you paid and get out on that trade. Now, if you do want to, if the trend continues right through the day and it ends on on a good trend, and you feel that the next day you're going to see a continuation of that trend, then it may be a good idea to hedge overnight. So, what do we mean by hedging? If you bought a call option on the original trade and you're getting a move in the direction, if you want to hold the trade overnight, then what you want to do is you want to sell a higher call. So, 5 strikes away or 10 strikes away. That way you're converting your long call position to a bull call position. So it is still a bullish trade. It is still a debit trade, but all you're doing is you're just hedging your position overnight so that you don't give up on those profits in case the stock turns back the next morning and you don't get a chance to do anything about it in the next morning. That way, at least now your short call is going to be profitable. Okay, so now let's see an example. I'm going to first show you just something here on the slides, and then what we're going to do is we're going to see what happened today, because I think the very interesting stuff happened today. So first we'll see a good example of a signal and how we look at option returns, and then of course, I've put this playlist here on this chat window. So, if you want, you can click on it right now so that you at least have the window there. You can actually look at all the trades that are being tracked on that playlist. First, let's look at, this is a Netflix position that we had about a couple of weeks ago when I was trying to prepare the course videos. We entered Netflix around this time right here, around 9:40, exited at 10:10. We got a signal right here, got a good signal to enter. Of course, you're not seeing the signals on this. You're just seeing some moving averages and stuff. There are a couple of key proprietary indicators. Not proprietary, I mean, a core intellectual property indicators that are customized that you don't see here. But we entered Netflix around 9:40, and when it was at 3:23, and then we exited somewhere here around 10:10 for 110% profit. So that's what you see right here. You can see at 9:39, bought 5 contracts at $1.20. This was obviously an out of the money option and a cheap option, but within half an hour that thing doubled up to 2.5. So that's the kind of returns you want to get. You want to look for. Obviously, anything 100 or over is a fantastic return, but on average, I think you're looking for somewhere between 30 and 50 and 60, somewhere in that range. Now, in this case, we got a really good move. As you can see from the chart, it went up by $7. So from 323, it went up to 331, $8. So that was a strong move. And obviously, on a move like that, you're going to get your 100%. So that is a sample trade. What I want to do is I want to let's just discuss. From the time we've started recording, I think on the playlist you're going to see a price line trade that made 40%, and another price line at 35%. Google at 30% in 1 hour. Yesterday we had a losing trade on Chipotle. I capped it at 20-25%, and we got out of that. However, yesterday Google more than made up for it as well. I see a question. Where is the trade list? On the chat window, Richard, can you see a link? Let me see if I can post it again. You can at least click it now, because that way you won't lose the um, link. So anybody, you can just click on it, or you can always go to the Option Tiger YouTube channel. Let me just show you that right away. The we have a YouTube channel here. It's the username is Option Tiger, so you can always just search on YouTube. You can search. You can just come here on YouTube and search for Option Tiger. It'll bring you to the channel. This playlist is called the Day Trade Max playlist. I Besides this playlist, there's plenty of stuff there. There's about over 300 videos there. Okay, so let's get back to our presentation. And today we made a nice trade, a small trade, but a very powerful trade in 30 minutes on Chipotle. So that's actually what I want to show you today, because this was a very interesting trade. Um, so this morning, if you recall what happened in the markets, the S&P in the pre-market itself was down. However, it was just down about a couple of points, 3, 4, 5 points. But the moment it opened, it started going down here. This is today's Wednesday. So it started here, and it boom, it just went down 15 points, and so um, it looked like that the markets were just going to go down today, because that's been the general sentiment so far. Granted, yesterday was a decent day, but yesterday was an inside day, so there was no conclusive. There was no conclusion you could do about what yesterday's trading was, and so I figured we're going to take a bearish trade for today, because the overall markets were also looking bearish. And so I'd identified a couple of stocks, Chipotle, Priceline, these were all looking bearish at that point. And so I waited for a bearish entry point. And I got that signal right here where you see this white oval circular thing. That was around 10:45. And so I bought a put option there, and in about half an hour, I got the signal to exit. And so I exited right here. It gave me 40%. But then what happened in the markets after that was the S&P came charging back. It was down 15 points at one time, and as you can see, it ended the day only 3 points down. So along with the S&P, all the major stocks also did a reversal, and you can see what happened with Chipotle. If there's no point in chasing trades. However, if I had waited just about 20 minutes more, I could have caught this reversal, because if you obviously you won't be able to catch it at the very bottom, perhaps somewhere here, and even that would have been fine, because as you can see, I missed out on the big trade of the day, which would have been this long position, a call option, a long call, which would have actually given us that 100%. I mean, now this kind of a move will give you 100%. Let's go take a look and see what happened, and you'll see now on Chipotle we did 1,050 today. Okay, so not a bad trade at all. I bought an option at 10:47, as you can see, corresponding to that this white this oval line here at 10:45, and I bought it at 10:45. I bought it for $2.55. I sold it for $3.60, so $1.05 profit. But and which is not bad at all. I mean, on a $2,500 trade, I made 1,050, so that's a 40% return. However, my point being, on many days you're going to see that between 10 and 11, some big trend is going to happen, and you want to catch that wave. Today I was a bit early. I think I'd decided that it was going to be a bearish day, and so I was looking for bearish trades. However, if I had not boxed myself into that kind of thinking, perhaps we could have gotten a trade out on this one. So anyway, so that was a very interesting thing that happened. It was a short trade, half an hour, and got out for about 40%. And that's what we did there. Okay. So, but that's the kind of trades that you're going to see. The uh, 30 minutes, 1 hour, 2 hours. If we had actually gotten in on the long side on this trade, I mean on the call side, we could have probably ridden this all the way. So because I'm looking for a particular signal to exit, and that signal did not happen all the way. So we would have rode this big wave on that one. Um, so let's see. So that's the kind of trades that you're going to see. Now, in the DayTradeMax system itself, what you're going to get is the complete blueprint to operate on your own. So basically, this is not a system where where it's where I feed you fish to eat. This is, I teach you how to fish itself. So you're going to get all the complete chart setup instructions. What are the indicators we look at? What is the customization of those indicators? All of that stuff is completely is included as part of the courseware. The courseware itself is about 10-15 videos that you'll go through, and each of these topics are analyzed and discussed and in detail. Then, how we want to how do we want to approach the whole aspect of trend? What do you want to see in trends? You want to look at the overall markets, you want to look at the stock, you want to look at the short term, the medium term, and somewhat long term. I would say 3 months to 6 months I'm calling long term, although that's really not long term, but for this kind of a system, that is long term. And how you can manage your risks. How can you cut down your losses, keep your losses to the minimum? The use of stop orders, trailing stops, all of that. So that's all covered in the in the courseware. And you're going to see these 5 or 10 trades. Now, if you're looking at the playlist, you're going to see those trades anyway. But what we have is a free 1 week of live trades after you buy the system. So once you get the system, you're going to be on a 1 week live trade service. Let's talk about that trade alerts. Within this free 1 week, you're probably going to see about 5 to 8 trades during that week itself, and so that would be a good opportunity where I believe everybody should be able to make up your investment into that system in that week itself. Now, beyond the first week, I have a monthly trade service that I'll be running. It will be a real time service. So, because I mean, as you can imagine, timing is critical here in this kind of a trade, and so it needs to be real time. So we have Skype chat, HIP chat, all of that. It's probably going to be HIP chat. It's a much more advanced real time system. It is mobile enabled, so you can download the app on your iOS or your Android phone, and you will be able to get your real time alerts there. The way it's going to work is before the markets open around 8 by 8 a.m. Eastern time, I'm going to send you a watch list of 2 or 3 stocks that we are looking for that day. So these 2 or 3 are obviously going to be filtered based upon what their current trend is and what the overall market is also doing. And then once we zero in on these 2 or 3 stocks, we forget about the rest, because if there is a trading opportunity that comes up within these 2 or 3 stocks, we are going to take it. Very rarely, if we don't have a good watch list of 2 or 3 stocks, then I might stray out and look for other opportunities. But in general, I'll also show you what kind of watch list I have and how we are going to choose. In fact, let me show you that right now. Basically, the way I look at it is you want to have liquidity in these. You want stocks that move on a daily basis, obviously, right? I mean, you want stocks that have some action, and so I have. This is something that I've been doing for years. I choose my top 10 stocks that I trade. It is Apple, Chipotle, Google, Amazon, Netflix, Priceline, LinkedIn. Now Tesla is on that list, Baidu is on that list, Facebook is on that list. So that's my top 10 or 11 or 12, how many ever there are. Now, if we don't find any opportunities among those 10 or 12 stocks, then I'll go slightly below that list as well. I have Twitter and some of the other ones, First Solar and all that kind of stuff there. But basically, we'll be looking for the trade in these top 10 or 12 stocks, because these are the stocks that move, and we don't care which direction it's moving. We just want a $4 or $5 move at the very least on these stocks. And all of these stocks generally, out of these 10 stocks, at least 3 or 4 are doing that on a daily basis. So that's what we would be looking for. We'll zero in on 2 or 3 stocks out of that. And then among those, I think we should see a trading opportunity. That's when I'll issue the alert. It could be any time between 9:30 and 11. But many a time, afternoons create some big reversals and big price action. So not that we won't be taking a trade after that. We'll definitely be on the lookout. And if something, and I'm a full time trader, so I watch this stuff all the time. So sometimes our post lunch session becomes very active, and of course we are going to find opportunities there. I'm just trying to give you a general case where we try to get in on a trade in the morning. All right. So this service, after the free first week, this service is going to be priced at 149 a month. It's flexible. It's optional, first of all, because you have the complete blueprint to operate on your own. However, if you don't have the time or the ability to do this kind of analysis, many people have full-time jobs, so you don't know which stock has started moving and all of that. So if you don't have the time, certainly I think this service will be worthwhile. There's no contracts or anything. It's a month to month. I will have an annual package also available at a 25% discount. So now these alerts start on Monday, Feb 10th. If you have any questions anytime, please feel free to email me at info@optiontiger.com. Or I would say you look at our YouTube channel. I've got over 350 options trading, technical analysis, all kinds of stuff over there. 95% of them are all free videos. So whatever you stay there, I mean, whatever you see there is all free. It's conveniently divided into playlists as well. Okay, so that is what I had, and so now I see quite a bit of questions. So let's see. What are the questions here. Okay, Richard says, do you have a link to your first presentation on Jan 29th? Richard, this is the same presentation. So as you know, this one itself is being recorded. And so you'll be able to pick up a copy, hopefully tonight itself. If it takes time to render, then I'll send it out tomorrow morning. Chung says, Hari, do you hold a trade overnight? Chung, I think you put this question in probably before I discussed it. So like I said, my preference is I prefer not to. If I have a good profit, I'll take it. But if anybody wanted to hold a trade overnight, certainly you could. My advice would be that you at least hedge it so that you don't lose the profits that you've accumulated, because the only reason you're going to hold a trade overnight is if you have profits, right? Okay, because if your position is not in a profit, there's no reason why you should be holding on to that position, because it could turn much worse the next day. So the only reason you're holding it is because you have a profit, and you believe that the next day the trend is going to continue and your position is going to profit further. That is the only reason why you would hold it. And so if that is the case, at least hedge it, convert it into a spread, 5 strikes above or 10 strikes above if it's a call option, and 5 strikes below if it's a put option, but convert it to a spread. That way, at least you're locking in some profits there. All right, playlist, Richard. Yep, that's the playlist. I put it up over there. What kind of option? Ranjit says, what kind of option? Weekly, monthly? Ranjit, this is a part of the system itself. How you choose the options is actually critical. And so that is part of the intellectual property itself, the core. We will probably be using many kinds of options, both weeklies. Well, you don't really need to go to the monthly, because that is too far. And there's no reason to go to the monthly, because you have the weeklies, you have the next weekly, and the weekly after that. So you do have a lot of weekly options itself. And you would go into a monthly if you plan to hold the trade. So that's more of a swing trade kind of an environment that you're talking about. If it's a swing trade environment, then of course you would want to go there. But this is not a swing trade environment. This is a more shorter term picture here. All right. Do you trade real money or paper money? Whatever I show for education purposes, Kim, is going to be on paper money. However, I'm going to show you, rather, I have some videos on the playlist on the, which is real money. But for the most part, I am showing you paper money. You're showing fills in paper money. Yeah, exactly. it's the same. These are long options. If you want to shave off another 5-10 cents, you could shave off and you'll get the same fill on the real money as well. All right, let's see. How do you pick the right long call out of the money delta 40? Yeah, Chung, this is exactly what it is. Obviously the signals and the indicators are where the real core intellectual property is, but how you choose the option is very important. In what kind of an environment would you choose what option is going to be important? And so you would that's part of the courseware. In fact, I have an entire section devoted to that, so you'll see that if you once you get in. Please explain your exit process. Did you have a stop loss? No, I did not have a stop loss on that option because it was because it was a winner and I'm watching it. So I don't need to give myself a stop loss. But if you are in a situation where you're busy with your day job or any other thing, I would highly recommend you put in a if your position is winning, you want to put a trailing stop because you don't want to cut yourself too short. So you want to put a trailing stop and let it go for as long as it can go. When you do put a trailing stop, remember you will face some slippage. So you're not going to get stopped out at exactly at the price you would like. It will put it will give you a lesser price. However, it's still better than not having anything at all, and you want to keep your profits protected. All right. So if you stay would looking one sec, I need to type something, otherwise people can't see the question. So if you stay looking, would you receive another signal to go long? Marco says, so if you stay looking, would you receive another signal to go long? I think you're referring to a chart. Yes, I see. I see what you mean. I think I see what you mean. This was, this signal it told me to exit today. Okay, it told me right there that things are changing, and yeah, you were referring to today's trade. Okay, got it. So if I hadn't gone in over here, this would have been a bullish signal. This was, in fact, a very strong bullish signal. That's why I got out, because it looked very, very bullish. However, I got out because I was already in. If I was not in over here, this could have potentially been along a bullish trade. However, because the markets were bearish, I would have probably waited till at least 2 or 3 more bars before I took the trade. I would have probably waited for that long. Um, let's say Balraj says you need to have at least 25K in the account to day trade options. Is that correct? Yes and no, Balraj. If you want to day trade options, you don't need to have 25K, but you'll be restricted to, I believe, 3 day trades in a week. Okay, so three day trades in a week. So if you stay under 3 day trades in a week, you can have an account less than 25K. But yes, if you do have 25K, then you can day trade more than that as well. So you are correct, and also there is this thing there. All right. Do you use any volume or market profile? Yes, I do, Charles. I do. Volume is critical. I do use volume analysis, and you'll see that also as part of one of the indicators that we use. How does it do in the forex market? It'll do perfectly well in the forex market also, John. The only thing in the forex market, I believe, is you don't have volume, but forex players have generally been used to that environment, so I think they're used to it. And but other than that, it's going to work on any instrument. It doesn't matter what instrument it is, because it's a signaling system. And so once you get the signals, it's going to work on any system. Um, Philippe says, "Hi, how do you use stops on your entries?" No, I just enter. I don't use stops on my entries. Where I use stops is if the position is going against you, and I want to restrict it to about 20% 25% at the most, because you want to cut your losers quickly, and just play it as a numbers game, and you have to be ruthless about it. Don't get emotional to the trade. If you're down 20% 25% out, and so you can put your stop there. So that's the only time I use the stop. All right. Do you trade on Friday of expiration? Depends on the signal and the trend, Charles. If there is a strong signal, sure, why not? Especially earlier on in the day, sure. It is, it may be a good idea to do that, because you're going to get a very high return if you get the move, if you trade the Friday. All right. Charles says, thank you. Okay. First time learned of your service. Yeah. Yeah. Please feel free to take a look. YouTube channel, like I said, has over 350 videos. You can take a look at that. Christina says, do you put the trail stop on the option price? Yes. Yeah. So you want to put the trail stop on the option price. Once you're, let's say, instead of this little trade here, we were in on this big trade on the bullish side. If we got in somewhere here, once it's moved into a profit, say around this level, I would put a trailing stop. And I would, in the case of Chipotle, I would probably put a 50 to 70 cent trail. So hopefully by this, from the time we got in to the time it got here, we would already be in some kind of a profit. Okay, let's say maybe 20%, 25%, something. Now you want to set your trail about 50 70 cents below that. And so as it keeps moving up and going, your trail is also going to keep moving. And as you can see, perhaps in this kind of a move, maybe it might have gotten triggered here. I don't think it would have gotten triggered here. I don't think it would have gotten triggered here, and neither over here. Perhaps here it would have gotten triggered, and you're happy. You're perfectly happy. It's taking you out at the at a good enough time. So, and you've been in the trade for 3 4 hours at that point. It's a good time to take the profit. So yeah, definitely use trailing stops. Very important tool. Now you can always argue, hey, I could have gotten out at the top here. Yes, but at least the trailing stop lets you stay in the trade for a longer time. And even though you might give up on some slippage, it's still the right thing to do. Jack says, if we buy this tonight, yeah, of course, of course, you're going to get access to it right away. And the trade alert starts on Feb 10th, because I just want to give everybody enough time to go through the material and be ready and all of that. So the trades will start on Monday. Today is Wednesday anyway, so the trades will start on Monday, and that's when the alerts will be. Um, Kirill says, if a person works during the day, he cannot trade on this market. Can another market be used, like Japan or Hong Kong? Yeah, of course, of course. You can do the futures, Kirill. You can do the futures in those markets. You can trade the indices in those markets. You can trade other stuff too. See, gold trades. Gold futures trade all over the place. There's foreign exchange that trades. So the signaling systems can be used for any market, any instrument, all of that. So that, because the signaling system just follows standard indicators. Its only thing is it's highly customized. In the in the in as part of this system. Marco says, I was referring to your today's trade. Yes, yeah, I was referring to your today's trade. Yeah, yeah. No, I understand. I think we were talking about this particular one here. Yeah. All right. Do you have any YouTube videos of you trading live? I think I do. You can see the playlist. There is some live trading right there. I think just the trade that I spoke of, you saw in the presentation, not the Netflix, the some other trade was there. We got. I think it was Priceline. You'll see one there. Okay. So Charles says, just curious, what kept you from taking the long trade on CMG? Markets can turn fast, of course. How do you deal with HFT speed on turns? Why do you use 5 minute charts? What kept you from taking the long trade? I just got out of a trade, Charles. I'm not the kind of trader that will chase something. If you miss an opportunity, you miss an opportunity. Just move on. I would look for another opportunity rather than try to play some revenge game with the stock. That's never a good idea. Markets can turn fast. Understood. No, the markets can turn fast, of course. How do you deal with HFT? I was asked this question last week also. We are not in competition with HFTs. In fact, I would say a lot of the signals that we look at are getting generated by the HFTs. We have to thank those guys for coming in with some big moves and doing, creating all these signals. So we come after them. We don't compete with them. They are competing with each other. One HFT is competing with another HFT. That's it. They want to get quicker so that they can put their big, 5 million contracts or whatever they are putting before the other guy can put his 5 million contracts. So, we have to understand we are not, retail traders are not in competition with HFT. There's a lot of confusion around what exactly these HFTs do. They do nothing except compete with each other. That's it. As far as the rest of the market is concerned, they provide liquidity. They provide good signals. Like for us, we should be thankful that they're giving us good signals. All right. Does this 25K rule apply to Roth IRA accounts? Do you know specifically Ameritrade? No, I don't, unfortunately, Victor. These kind of questions, please call Ameritrade. I mean, they've got really good people, waiting on the line to, answer these kind of questions. So, just give them a call, and I think you'll have all of this answered. Um, all right. If we buy this tonight, Jack, I think I already answered that question. Yes, if you can start. If we buy this tonight, can we start the program at a later date? Yes, you can. Absolutely. So if you want your free week, maybe instead of Feb 10th, you wanted Feb 20th or March 1st or whatever. That's fine. Just send me an email and let me know you don't want to be on the list now, but you want to be on the list later. That's it. Will you send buy and signals, sell signals, Steve? I actually replied to your email. I don't know if you got it. The Yes, I do. Obviously. So we'll be sending clear signals for buying, sending clear signals for exiting. Now, if you don't want to exit and you want to continue, that's fine. That's up to you. But I think I will be sending a signal where I am exiting, and then you can take that call yourself as to whether you want to exit or not. Is the monthly service tied to buying the system? Yes, it is, Balraj. So tied to buying the system, or one can subscribe to the trade alerts without it. It's not going to make sense to you. And plus, because I have only one monthly subscriber system, if there are people that who have bought and people who have not bought, then I'll have to separate the two groups, and I can't deal with that. So it's only one group. And like I said, most of my philosophy is, in general, all my systems, I teach you to fish. I don't want to feed you fish. So my whole goal is I teach you to fish. You will get the complete blueprint. There's nothing that's going to be kept, held back. You'll get everything, and then once you see the alert, then it's going to make sense to you. And hopefully, over a period, even if you take the monthly service for 2 or 3 months, you'll get some experience as to how to look at these opportunities and when to dive in, when to dive out, all of that. And then my whole goal is that you should be able to operate on your own. So that's the philosophy behind it. All right. Charles says thanks. Yep. Thanks. Got it. Very good. All right. Great point. Okay. All right. Christina says, "Do you, no? Great question. Do you use the same amount of trail stop on all trades, 60 to 70? How did you pick that for CMG? Excellent question. So the way I looked at CMG, if you I don't know if what the option prices will show now, but let's just go take a look. If we were to trade CMG, and what I want to put is this. Okay, so this is CMG. And perhaps because the it's aftermarket, the bid ask is very wide. What I found was, generally CMG has a bid ask spread of about 20, 30 cents, 40 cents. And you don't want to get your stop. You don't want to get caught in that in that bid ask spread itself. So basically what I'm saying is, if you put your trailing stop as 40 cents and the normal bid ask spread is also 40 cents, you're going to get out of, it's going to take you out of the trade much quicker. So your trailing stop has to be a little bit more than the bid ask spread. That's one factor. The second factor is you've got to give the stock or the option some natural wiggle room itself, because nothing is going to go in a straight line. And as you can see, you're going to see these up and downs, up and down. So and you don't want to get stopped out all the time over here. So you need to give it some wiggle room. So when I looked at the option prices this morning, I felt about 60 or 70 cents would be ideal for Chipotle. Now, obviously, it depends on the stock. Chipotle is generally much wider. In fact, the best spread. Let's go take a look at Apple. And you can see here, this is 20 cents, 20 cents. And this is after hours. So once the market is open, this could be 5 or 10 cents for Apple. So with Apple, you could give a 70 cent trailing stop if you wanted to give a lot of wiggle room for Apple. But just because of the bid ask spread, you don't need to give 70 cents. In fact, with Apple, I would probably do 50 cents. With something like Priceline, I would do even more, because Priceline, it just needs a lot of wiggle room as a stock. If you look at its chart, yeah, I mean, just check this out. These are 5-minute bars, and it just goes crazy. So you don't want to get stopped out every now and then. So Priceline, you have to give a lot more wiggle room than anything else. So those are the two things I would look at, Christina. All right, Balraj says, "Yep, thanks, good." Okay, let's see what else. Any other question? I don't think I've missed. Let me just go through the list again, see if I've missed something here. Jack says you were using an acronym. Yeah, exact. Jack, HFT is the high frequency trading. So these are these. Well, they are hedge funds in some sense, but basically what they do is, they try to enter the market before anybody else can. So they sit right, they co-locate. Actually, they have multi-million-dollar computer systems, high speed. They are directly connected to the stock exchange, and their latency is very low. I mean, we're talking like microseconds. So the moment a signal comes from the stock exchange, it goes first to the HFTs, and that's when they take their trades. And so, if you haven't heard of HFTs before, keep your eyes and ears out. You're going to see a lot of them, because, they're not manipulating the market or anything. They just want to get in front of everybody else. And, for us retail traders, that's fine. Let them give us the signals. We are fine with that. But we don't compete with them. They compete with each other. And there are many of these firms, and they all compete with each other to get in before each other. So, Kim says, thanks. You seem smart. Thank you, Kim. 1 week of alerts, and then you pay 149 per month for alerts. The 149 is completely optional. You may want to try it for a month, see if you like it. I think if you're benefiting from it, I think it'll be worth it. But if you otherwise generally have time, if you're a full-time trader, or if you trade a lot during the market hours, you may or may not need it. It's up to you. It's optional. My goal is, if within that 1 week, is to at least be able to produce one or two of these 100 percenters at least, and and then the rest of it perhaps, so anywhere from 20 to 30 is okay, but I'm hoping to give at least one or 200% so to make up your investment. So that's my goal. Hopefully it'll happen, because they do come around. Out of 10 to 12 trades you will see two or three 100%ers, because sometimes you'll catch the move, and frankly, the signal itself is not going to tell you how big the move is going to be. But if you get in at the right time, it's luck, right? Let's face it. If you're lucky, you'll get a 10-point move on the stock and you'll make 100% that day. So that's the goal anyway. um, are the entry and exit signals quite objective? Balraj, I need you to I need you to expand on that. What do you mean by objective? Are the entry and exit signals quite objective? I'm not sure what you mean. So go ahead and enter. I'll see if I'll come back to you. Yes. Will we get an alert on SMS? You're going to. It's going to be the it's going to be a mobile base. So if you used Skype on your mobile phone, you know what I'm talking about. It's going to be that kind of a system. It's not going to be an SMS, but it's going to be an app. So you can go to this. I'll tell you what. You can go to this site right now. This is something I use for my other alert. I'm sorry, typed it in wrong. Okay, hipchat.com. You may have heard about it. You may have used it also, but that is probably the platform we are looking at. So you go to hipchat.com. For you as a user, they'll give you an iOS app or an Android app. You download it on your phone, you keep it on every morning, and you as soon as you get something from me, it'll alert you however you set it up, some ringtone or whatever it is. All right. Christina says he probably means clear to all and not subject to. Oh yeah, so everyone would come up with this. Oh no, no, no! I'll be giving you the entry. I'll tell you. Okay, Google buy the 560 call. So it will be very specific. Yeah, it will be very means of most. Yeah, okay. I think both of you were on the right track. I did not catch it. Balraj also clarified that it means all or most of the people will read and recognize the signal the same way, or is there subjective? No, I see what you mean. When you look at the chart, I mean, let's face it. All of these things, there is an art to it as well. Okay, so and that it's not that it's rocket science or rocket art, but you learn it over time. So it is there is an art element to it, but the signals are very clear. It's very clear, it's there. And of course, no signal can be 100% perfect. So you will see some a couple of fakes, and that's when you cut your loser and move on. But for the most part, you'll see the signals are very, very clear. Where the art comes in is when you need to make a subjective call. Uh, like today, who would have known that the markets would have reversed like that? Who can expect that? You can't. It's just not possible. I had taken the trade here. If I'd just waited for 20 minutes, we would have, I would have gone on the long side. This is, of course, a different stock, but most stocks behave that way. They turned around at 11:10, right after I got out of the Chipotle. That's when it all turned around. So, I mean, that happens. There's nothing you can do. And yeah, yeah, trade alert service. Okay, folks, I think I've answered all the questions. Doesn't look like missed out on anything. If there is any more questions, Balbir says, if the CMG signal was a bullish signal, why did you enter a long call? I don't get it. The CMG signal was not a bullish signal. I was looking for a bearish trade at that point because the markets were very bearish at that time. So it's you want to go with the trend. And certainly till 10:30 this morning, it looked like a very bearish. Wait, hold on. What did I do? I Typed it in the wrong one. Okay. All right. Yeah. So if the CMG signal, the CMG signal was later, Balbir. I did not get in on on that signal here. I got in on this signal on a bearish trade. The bullish signal that I got was here, which told me that I needed to get out of my bearish trade, and that's what I did. But if I was not in this bearish trade, this signal was actually very bullish. So I just completely I got out right away because it looked very very bullish. But and then looking at what happened in the markets from a hindsight situation, we know exactly why that was the case. The S&P was turning around, all the stocks were turning around. So that happened to be a major reversal point at that time. So, but in real time you could not have guessed that was the case because the S&Ps were down 15 points. The market was it almost seemed like the bottom would fall out just like it did 2 days ago. It almost seemed like we were headed for a day like that. Okay. All right, folks. So I think that's it for all the questions. Last call on any other question. Otherwise, you can always email me info@optiontiger.com. Okay. All right. Have a great evening, everybody. Thanks for coming. Hope you enjoyed it. And if you have any questions, please email me. Thanks a lot. Good night. Bye bye.